How's it going, you guys? My name is Charles, and this is the Traders Corner. Now, I started the Traders Corner with a couple of friends of mine, Daniel and Isaiah, and we started TTC essentially because we've spent years failing forward to learn more about the skill of trading and just general knowledge about the markets. And we want to save you some time on your journey to learn more about trading or just the markets in general. And today, to do that, we're going to talk about the idea of what a put-call ratio is. Now, who might care about the put-call ratio? Well, first and foremost, if you trade options, you might be very interested in understanding the put-call ratio, and not just understanding the put-call ratio for one stock, but essentially for any option or security that you're trading, right? And understanding that it can kind of be very helpful to understand kind of what is the sentiment around a stock or a security, right? Because you can have options for different securities, right? It doesn't just have to be stocks. And why does the put-call ratio kind of tell us a bit about the sentiment? Well, if you look at this handy-dandy definition here by our friends at the Economic Times, the put-call ratio is an indicator commonly used to determine the mood of options markets. Blah, 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 blah. They talk about it being a contrarian indicator, but that's not the important part, right? The important part is where we talk about how the ratio is actually calculated, right? Because I'm not telling you how to think about the put-call ratio. I don't want to tell you how to think about it. The only thing I want to tell you to think about in terms of the put-call ratio is the fact that it will measure sentiment. And I'm not telling you that because I believe that. I'm telling you that because of what the definition of the put-call ratio actually is and how it's calculated. So let's look at that. The ratio is calculated either on the basis of options trading volume or options contracts on a given day, right? So what is that? Like, that's the volume or the open interest. If you know anything about options, you know that those are two very important things to understand about an option that you're looking at, right? What is the volume? What is the open interest in that option? Now, the way to calculate the put-call ratio is by dividing the number of open interest or volume, right? Because they said volume or open interest in a put contract by the number of open interest or volume in a call option, right, or call contract at the same strike price, same expiry on any given day, right? So let's say, we take a $25 strike of an option. We would look at the put and call, and we would look at, say, for example, we'll look at the open interest on that put versus the open interest on that call. Now, understanding the open interest of the put versus the open interest of the call, we can get a put-call ratio. And understanding that ratio, we can understand, are more people kind of leaning toward the put side or more people kind of leaning toward the call side? And understanding which way is kind of an important thing it's important nuance to understand, especially if you're looking at things for like the put-call ratio on an indice, for example, like the S&P, right? Because the SPY or the SPY, which is essentially just like an ETF that you can trade, it has its own options. And very much so, it's kind of become like a de facto way for traders who don't trade like the actual indice itself. You know what I mean? It's become kind of a de facto way for people to trade the SPX, right, or the S&P. And so because of that, you can kind of look at the put-call ratio on SPY or SPY, that ETF of the S&P, and you can get an understanding of kind of what is the sentiment around the S&P, right? And same thing with QQQ for the NASDAQ. Now, where are you going to get this data for the put-call ratio? Well, you can look at a couple places. Obviously, not a bad place to look is this actual CBOE website. This is definitely something that I learned, and just a nice quick tip that I picked up in my finance degree was, and this was just from my teachers who, worked in the space and all this kind of stuff. They always said, like, don't try not to get derivative information from people if you can help it. Why not just go to the source? And the CBOE definitely being like one of the big sources for options data, right? So definitely check out the put-call ratio for the CBOE. Like their website, if you essentially just search put-call ratio on S&P, you should see that in terms of CBOE being one of the first sites that you see. So here we can look at the total put-call ratio on, what is this? I think this is like total. So the total is probably going to be of all the indices, that the CBOE tracks, right? You have the S&P here with the put-call ratio, right? And we can see here that the put-call ratio right now is 1.23. Well, what's that going to tell us? Well, if we just do basic math, 1.23, puts on the top, calls on the bottom, right? Calls on the bottom. Well, let's say that we want to be bullish and calls on the bottom. We're going to want to see a lower number, right? Yeah. So since we're seeing a number above 1 That means that generally more people are, interested in puts than calls. Now that doesn't mean they're automatically bearish, because you always have to understand that there's a slight nuance between why you might use a put and a call, because you can definitely use a put to place a directional trade, like a downward trade, right? Like you don't believe in this company, so you use a put to place a directional trade, or even use a put to place an upward trade. Maybe you write a put, right? And you do the same with calls, right? Just on the flip side, in terms of you buy a put because you want the stock to go up, you think the stock's gonna go up, or the security's gonna go up, or maybe even you write a call. You buy the call because you think the stock's gonna go up. You maybe even write a call because you think the stock's gonna go down, like that kind of stuff, right? So you can make directionally based trades with puts and calls. It's just that puts are generally used more often for what's called hedging. Now, what is hedging and why is that important? And this is the last thing that we're going to end off on. Well, hedging is essentially, let's say that I own Apple, but I'm not 110% sure that Apple's going to go up, as pretty much nobody really is. And especially if you have big money, the biggest thing for you is downside protection. It's not really making upside. The biggest thing is downside protection, because as important as return on capital is, return of capital is just as important to these people with big money. So it's important that you don't blow up their accounts, right? If you're managing big money. So oftentimes you'll see big managers, big fund managers, they'll use hedging on a lot of their positions, right? That's what a hedge fund is supposed to be. A hedge fund is supposed to be somebody who's not just all long or all short, all this kind of stuff. You know what I mean? Like, they have to be kind of hedged in some way, because it's not about making ridiculous outsized returns. It's really about not getting beat up when the market is getting beat up like it is now. I'm recording this October 12th, 2022, so the market is not in a great place, right? So that's kind of what a hedge fund is about. And so that's why you see a lot of institutional players use things like puts as hedges, like I'm saying. And so understanding that they're using things like puts as hedges on a long position that they might own, that means that they might not actually be bearish on that stock. That's just their stop loss. You know what I mean? And there's nothing wrong with having a stop loss. So you have to kind of understand that and try to like extrapolate that when you're thinking about the put call ratio, and you see that, you have a higher put ratio than call ratio, or you have a higher call ratio than put ratio. You have a higher amount of calls and puts, or higher amount of puts and calls, all this kind of stuff, right? So hope you guys enjoyed this video, man. Hope it provides some value to you, and join us again next time. Thank you.